The morning of February 5, 2016, the central bank woke up to find that nearly $1 billion had vanished. Not stolen in a heist. No one broke a window. No one fired a gun. No vault was opened. The money moved through a pipe so invisible, so embedded in the architecture of global finance that most people alive today have never heard of it, even though every dollar they have ever earned, spent, borrowed, or saved has passed through it at some point. The pipe is called SWIFT, and once you understand what it is, how it actually works, who controls it, and what happens when someone gets cut off from it, you will never look at money the same way again. Because here is the thing about SWIFT. It is not a bank. It does not hold money. It does not move money. It sends messages. That's it. Highly structured, encrypted, internationally standardized messages. And yet, cutting a country off from those messages is now considered one of the most powerful economic weapons on Earth. More damaging in some cases than a naval blockade. More immediate than a decade of sanctions. A messaging system used as a weapon of war. Let's go back to the beginning. Before 1973, international banking was an exercise in controlled chaos. If a bank in New York needed to send money to a bank in Tokyo, someone had to physically telex a message or mail it. Instructions were typed, transmitted over telephone lines, sometimes misread, sometimes delayed, sometimes lost entirely. There was no standard format. Every bank had its own system, its own codes, its own procedures. A transaction that should have taken hours could take days or weeks, or simply fail somewhere in the middle of the Atlantic with no clear explanation. By the early 1970s, the volume of international trade had grown large enough that this was becoming a genuine crisis. Banks needed a common language. In 1973, 239 banks across 15 countries sat down and built one. They called it the Society for Worldwide Interbank Financial Telecommunication, SWIFT. It went live in 1977. On the first day, it processed 319,000 messages. Today, it processes more than 40 million messages every single day, connecting over 11,000 financial institutions in more than 200 countries and territories. It is headquartered in Belgium. It is governed as a cooperative, owned by its member banks. It is overseen by the central banks of the G10 nations, with the U.S. Federal Reserve and the National Bank of Belgium taking primary roles. It is, in the most literal sense, the nervous system of global finance. And like all nervous systems, you only truly appreciate it when something goes wrong. Most people assume that when you wire money internationally, the money travels. It does not. This is the central misunderstanding of global finance, and it is worth taking a moment to get it right. Imagine you're in London and you want to send $5,000 to someone in Sao Paulo. Your bank does not put $5,000 in an envelope and fly it to Brazil. What actually happens is a series of messages, promises, and accounting entries across a chain of banks that already trust each other. Your bank sends a SWIFT message to an intermediary bank, often a large institution like J.P. Morgan Chase or Deutsche Bank, that has a pre-existing relationship with a bank in Brazil. That intermediary debits your bank's account with them. The Brazilian correspondent bank credits the recipient's account. The money itself never moved. The numbers in various ledgers changed. Promises were exchanged. Debts were settled later in bulk through a process called correspondent banking. SWIFT is the language in which all of those messages are written. Every message has a specific format, a BIC code identifying the sending bank, a BIC code identifying the receiving bank, the amount, the currency, the purpose, standardized, parsed by machines, logged. Always logged. This is important. SWIFT does not just transmit messages, it stores them for years. Every transaction instruction that passes through the network leaves a record that, it would eventually turn out, the United States government had been quietly accessing for years after the September 11th attacks through a classified program called the Terrorist Finance Tracking Program. When that program was exposed by the New York Times in 2006, SWIFT found itself at the center of a geopolitical firestorm. A Belgian cooperative headquartered in Europe, providing data to American intelligence agencies without the knowledge of European regulators or the banks whose data it was. The European Parliament called it a breach of European law. The U.S. called it essential to national security. SWIFT called it complicated. The investigation quietly concluded. SWIFT quietly continued. And the world kept sending its 40 million messages a day. Back to Bangladesh, February 2016. The Bangladesh Bank held reserves at the Federal Reserve Bank of New York, standard practice for central banks. Those reserves were protected, in theory, by SWIFT's authentication systems. Hackers, later attributed by U.S. investigators to a North Korean state-sponsored group called Lazarus, had spent nearly a year inside Bangladesh Bank's systems. They studied the message formats. They learned the timing. They watched how transactions were processed. Then, on a Thursday night Dhaka time, which was a Friday in New York, meaning American staff were heading into the weekend, they sent a series of SWIFT messages to the New York Fed, instructing it to transfer nearly $1 billion from Bangladesh's reserves to accounts in the Philippines and Sri Lanka. The messages looked legitimate. The authentication credentials were correct. The format was right. The New York Fed processed most of them. $81 million reached accounts in Manila before anyone realized what was happening. The other transfers, totaling around $850 million, were stopped for a reason that, depending on your disposition, you might find either reassuring or darkly funny. One of the transfer instructions misspelled the word foundation in the name of a recipient organization. A routing bank flagged it as suspicious and asked for clarification. A typo. A single misspelled word stood between the Federal Reserve and the largest cyber bank robbery in history. The $81 million that did move was largely laundered through Philippine casinos, which at the time were exempt from that country's anti-money laundering laws. Most of it was never recovered. SWIFT subsequently acknowledged that it had not done enough to protect the integrity of its messaging system at the endpoints, inside individual banks' own infrastructure. The pipe itself was fine. The doors at either end were not. The Bangladesh heist revealed a vulnerability in the plumbing, but there's a different kind of vulnerability built into the system by design. SWIFT presents itself as a neutral, apolitical infrastructure, a cooperative, a utility, as neutral as electricity. It is not. In 2012, under pressure from the United States and the European Union, SWIFT disconnected Iranian banks from its network as part of the sanctions regime targeting Iran's nuclear program. Iran's ability to send or receive international payments effectively collapsed overnight. Oil exports dropped by half. The currency lost 2/3 of its value in a matter of months. The economy contracted severely. No missiles were fired. No troops were deployed. A messaging system was turned off. In February 2022, following Russia's invasion of Ukraine, 7 Russian banks were disconnected from SWIFT. The move was described by European Commission President Ursula von der Leyen as cutting Russia off from the international financial system. Russia had spent years quietly preparing for exactly this scenario. After the 1914 Crimea annexation and the first wave of Western sanctions, Moscow had built its own domestic interbank messaging system, SPFS, as a SWIFT alternative for transactions within Russian borders. China had built something similar. The Cross-Border Interbank Payment System, CIPS, launched in 2015, is processing international payments in Chinese yuan and is designed explicitly as an alternative to a dollar-dominated, SWIFT-dependent financial architecture. The dollar's dominance and SWIFT's dominance are not separate phenomena. They are the same phenomenon. SWIFT is primarily a dollar clearing infrastructure. Most of the world's major commodities, oil, gas, food, metals, are priced and settled in dollars, which means they flow through SWIFT, which means they are subject to American financial oversight and American sanctions authority. The United States did not design SWIFT, but it understood earlier than most that whoever influences the pipe influences the world. When Russia was sanctioned in 2022, a particular phrase circulated through financial media, SWIFT as a nuclear option. The implication was that cutting Russia off would be swift, forgive the word, and devastating. The reality was more complicated. Only 7 Russian banks were disconnected, not all.